got the impending US elections, and then of course still in a limbo whether the Fed is going to hike rates and when it is going to hike rates, more importantly. So let's try and gather sense. We've got with us Kunal Kapoor joining us right here from the Morningstar conference on where does India stand amidst all of this confusion. Kunal, good morning. Thank you so much for joining in.
Happy to be here.
What's happening with the world? I guess all the focus is on far west right now with the US elections. Do you think the markets are beginning to price an outcome? Or do you think whatever the outcome may be is going to take the market by surprise because it's still so 50-50?
Well, I think the markets are starting to price in a victory by the Democrats, but certainly we'll see how that goes. A lot of the surveys seem to indicate that.
So we did get you together now.
I will say that, you know, I think at the end of the day, a lot of noise is made around elections, whether they matter, whether they don't. But ultimately, if you're an investor, you have to learn to tune that stuff out. And I think regardless of the outcome, probably the thing for investors to be focused on is sort of more fundamentals, and ultimately they rule the day.
But you don't expect that from now up until the elections there's going to be heightened volatility? I mean, we're seeing that already play out in the yield and currency markets.
I mean, there might be, but you could look at Brexit as well, and what happened after Brexit. You had a very sharp fall in some markets, and very quickly that sort of bounced back. So I think ultimately there's a lot of talk that occurs leading into elections, and that makes people uneasy, but when you have to govern, it's something completely different, right?
Kunal, what amazes me is that you got a almost zero interest rate regime in the world. Trillions of dollars of liquidity or cash is lying in bonds which are not giving you returns. And Indian markets, or markets like India, which offer you a better yield and a better promise, they're getting flows, but they're not most of the town. Large part of the allocation is still tilted towards fixed income.
Yeah, it's true, and I think a lot of it has to do just with people's desire for safety. I think if you look at a lot of research, people overvalue safety in their portfolios. But at the end of the day, the reality of it is if you can, in fact, protect yourself and protect your nest egg, that's important for people. But I think what people underestimate by perhaps not investing as much outside fixed income is the growth that they need to have in their portfolios for later years.
You know, sitting in India, we can easily talk about good funds in India, good fund managers in India, poor performers. But as an outsider, if you have to rate Indian fund managers on a global benchmarking basis, where do we stand, and are you advising your clients that they should allocate serious amount of money to Indian schemes?
Yeah, I mean, the way I think about it is that certainly investing in India has come a long way in the last decade, and you certainly have you have different voices emerging in India, people, and you're going to hear them here at the conference, people who are bulls, people who are bears. So I think that that's good development, that not everyone is always positive, because with active managers you always run the risk that they're always positive. But certainly I think it's come a long way, and when we think of India, we think of it within the context of really kind of having a global diversified portfolio. And certainly, when you look at India in comparison to a lot of other Asian markets, a lot of other emerging markets, the level of transparency here is much higher. The quality of companies is greater. And certainly, I think what you hear a lot about with India always is that there's more entrepreneurs starting companies, and that creates a pretty big pool that people can invest in over time.
So what is the broad view in India? I mean, is it all going to be about the consumption theme? Because that really is the selling point for India, isn't it?
Yeah, it's consumption.
The internal consumption.
It is. It's also demographics. If you look at a lot of markets that have negative long-term trends, I mean, Japan is one in particular that I think a lot of people think about. The problem with Japan, and the one that they can't solve, is that they have a demographic problem. And now you sort of are seeing China is trying to solve that as well. The positive for India is long-term. The demographic situation is positive, and so that should be a positive undertone for India for a long time. And so certainly the likelihood of volatility is always there. There will always be macro factors, but if you're a long-term investor, the trend should certainly be a positive one.
There is a lot of global debate on the fact that money is moving towards passive investing by ETF. The benchmark indices will outperform best of the fund managers on a long-term basis, and Buffett has been public on this when he's talking about this famous bet. So what is your view on that, and do you think within India if someone has to allocate, because the dynamics are different, the opportunity is different, it's a young economy, should one go the passive way or the active way?
So I think that's a really good question. If I had to point to one thing, I would say it's actually not a passive versus active debate. That's how people frame it. I think it's a low-cost versus high-cost debate. And really, if you look at Morningstar data, where you see outflows in the West, everywhere, is out of high-cost funds.
Okay.
And in the Indian market, I would say that there's probably still potential for costs to come down, and so as an investor, that's where you win if you focus on low cost. I think the active-passive debate is an interesting one, but not as relevant as the high-cost, low-cost debate.
But that's the problem, because we speak to fund managers and market men almost on a daily basis, and they say that valuations are getting a little toppish.
Yeah.
I mean, the reason justified from what we were after the post-Brexit recovery to now where we are at 8,500 on the index is because valuations were getting rich. This had to happen.
Yeah.
The markets were just looking for a reason. So where do you think India stands as of the current date? I mean, we're not a cheap market.
Yeah, well, you're not an expensive one either.
Yeah.
So, I mean, I think the reality of it is really more that if interest rates do move up, as you referenced at the outset, I think that is generally a negative event for equities globally, right? And there's a correlation to that. But here in India, too, you recently had a rate cut, right? And so I think with that backdrop, the discount rate is fairly low, and so the environment for equities, I think, remains favorable if you have a horizon of 3-5 years. If you have a horizon of 1 year or whatever, I mean, that's a tougher thing to call, and you probably should not be in equities.
So let me ask you some closing comments. In the next 12 months, a lot will change, and a lot is expected to change. Fed would have moved. We would have the outcome of the US presidential election, some clarity on Brexit, and hopefully markets will also realize that central bankers are not giving enough productivity. So that entire bogey would have got challenged.
Yeah.
So in next 12 months, what is one event which you are monitoring and which to your mind could be a market moving event in nature?
Yeah, I think probably the most significant one to be keeping an eye on is the Brexit event.
It's not presidential election or Fed. You think it's Brexit?
I think ultimately that's short-term noise.
Okay.
Rates will go up, possibly go down. I mean, I think everyone has been wrong on when rates are going to go up for a long, long time, so I think better to start predicting that. But I think the Brexit issue is a significant one. It could change the way companies deploy capital, how capital moves, and certainly I think there will be an impact on what can be sold in the UK, how it's sold. And certainly we've even seen here in the past week Unilever trying to raise prices in the UK and kind of a big hubbub around that. And so certainly I view that as very significant in the terms through which Brexit is finalized. I think there's a view that it may not be serious, there's a view that may be very serious, and we'll kind of have to track and see what happens.
But given the worst case scenario for a Brexit and the repercussions thereof, do you think, what would it mean for India? Just near-term volatility when US markets sink or EU sinks and we...
I mean, certainly you see more correlation.
We're sort of decoupled in that sense.
Right. You certainly see more correlation. And I mean, look, the reality is there's always going to be one or two macro events that are going to impact...
Shake the world.
Yeah, and I think as an investor, you have to be willing to look past that. I mean, if there's anything I've learned over the years, the key is to own good companies that have good ways of kind of weathering the environment regardless and provide services that are going to persist over time. And, you can look at the history of some of the largest companies here in India and how they've kind of grown over time. There have been a lot of events in the last 30, 40 years in India that you could look at and be like, oh my God, those are very significant events. But if you're a good company and you have favorable demographic trends, I think over the long term you're probably going to be fine.
Appreciate your time.
Absolutely. Thanks for being here at the conference. Yeah.
It's lovely to be here.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.